Let's talk about that. It's front page of the Financial Times, and it's a press release from the CBN in Nigeria, and I'm sure that there's many more such considerations happening within emerging market economies where they're saying, is it clever to have a lot of euros or a lot of dollars in reserve?
Well, the two largest trading partners of these countries are Euroland and the US, and that is why they have those reserves to have available the type of money which they use to trade with those countries. So yes, it is necessary for them to have it in reserve. They don't put the money there to save it and to make money out of the currency going up or going down. They use it to trade with those countries and actually to be able to have available the trading commodity, the trading currency in hand with which they will have to buy or have to sell to those countries. Right. So it will be not very clever if you have a lot of dollars and the dollars start to deteriorate against the euro, and now suddenly you actually have to pay the Euroland with the dollars. Yeah. So I am a little bit wary. You must remember one thing. I used to be a journalist years ago, before I went to the stock exchange, and no trader will tell newspapers what he's going to do next. Yeah. And in many instances, it is clever. It's clever journalists who's trying to get ahead of what is going to happen.
Right.
And on the other hand, it might be sometimes the people who's leaking a story to send up a flyer or a flag so that they can see what jumps up and how they should react to that.
All right. At the moment, though, it's positions being reviewed. We're not seeing a sell-off. But is this likely to lead to a sell-off of euros from, say, Nigeria or China? And what will that mean for a euro that's already significantly lower than it was?
Yes, I don't think a country will, if they plan a sell-off, will say to the world, listen guys, we're going to sell off, because it will have a huge negative impact on what they're trying to do. So they will much rather feed into the market. So this whole thing of sell-offs on the front pages of newspapers is a little bit dangerous for people to react on. It doesn't work that way. And we had years ago, when we still were trading on the floor of the JSE, a saying that when they start to talk about gold on the front page, you must know that you must take the opposite position.
But I mean, what about the reality that when a euro depreciates, it has a direct impact on the value of your reserves? And for emerging market economies that need to access debt on the international capital market, that has some bearing. So it may be alarmist at the moment, which is what you're suggesting, but it's certainly something they can't ignore when they've got a huge stockpile of euros or dollars when the dollar was depreciating last year, and they're not sure what that means for the value of their reserves.
Yes, no, that is absolutely true. But they must also remember that the value of the reserves is measured against another counter value. And you must always remember that you must look at what you have in your pocket with which you are going to trade with someone else. And if you're going to trade with that person, the value in terms of the other country with which you are trading will go up or down. But against that country with whom you're trading, it stays the same. And I'm afraid that this whole idea of the value is going down in the reserves, so we have to sell off. Yeah. The fact of the matter is you have to trade with that particular area. And you know what, when the prices go down there, it's actually cheaper for you to trade there. But you must be careful not to jump into another currency with which you're not going to trade with in that particular currency.
Craig, I mean, we had this conversation in the newspapers, but I mean, is it simplistic for me to say it's like saving, and you save $1,000, then all of a sudden the interest rates go down, the dollar depreciates, and you thought you'd saved $1,000, and now you find you've only got $800 in the bank? I wouldn't be happy.
No, you wouldn't, but I think you have to look at it the way Hein's talking about it, in terms of you know, your imports, your level of imports, and what you can import from that country. If the currency moves up or down, it kind of changes the amount of imports that you could get for a particular value. And again, you know, you have to diversify the dollar went against the euro. We were 160, then we were 120. To chop and change just on a 1 or 2 year view is very short-sighted. You go into China today. When I was there, they told me the one thing I learned was they make 50-year plans there. They don't talk about next week or next year. They make long-term plans. So I think it would be very short-sighted for them to get out of euros and to be going back into it next year or the year thereafter.
All right, Hein, let's take this debate beyond into sort of the G20 space, where we saw China leading the clarion call to look at an alternative reserve currency away from the dollar, and that was because of their exposure to US Treasury bonds at the time when there was a real slump in the United States, and they were really concerned about being a creditor to a country that may not be able to give them value for money in terms of those Treasury bills. China again now raising the alarm on the euro because they have such huge exposure to euro debt. Is it time, seriously, to start thinking about alternative currencies away from the euro and the dollar, and what would that currency be?
I think the world was very happy when the euro appeared, because it created the impression that there was now an alternative between the yen and the dollar. I was always very skeptical about the euro to a large extent, because we sit there with a very heterogeneous society. I mean, Germans and French people are definitely not the same, and then you throw in a bit of Portuguese and Greeks and Spanish people in,
Right.
and it creates a large problem for the world. Yes, we have a problem at the moment, and that is, what's the alternative for the dollar? And I think that is why we've seen the rise in gold, in the gold price lately, going up, because I think to a large extent that is what people start to look at as an alternative.
Lots of pressure for the Chinese to trade their currency up to what the market would value it at and stop pegging it to the dollar. That's a separate conversation, but it's a conversation that's leading to the fact that as the third largest global economy, people are saying the Chinese currency must be put out there as a possible reserve currency.
Yes, but the Chinese don't feel the same way, and they do what is good for the Chinese at the moment, and they peg themselves to the dollar, and they will peg themselves to the dollar till they feel secure that they can loosen up, and when they probably feel secure that they will become the alternative currency in the world.
Craig, are there any emerging market currencies that are tradable, stable, that can survive the stresses of the global financial markets and the volatility that exists, that we could start looking at?
Well, the rand, of course, is one of the big emerging market currencies, one of the most tradable. One can't call it stable because we've seen it go all over the place. But it's used as a proxy for all these other emerging markets. If you want to trade in something quickly, something's happening in one of the emerging markets, you quickly hit the rand or you buy the rand. So there's a lot of trade. I think nearly 4 billion a day on the spot market in the rand. It's very liquid, and that is one of the key emerging market currencies.
Just your view on emerging market currencies and whether or not they can withstand stresses. We know that within Asia, because of the growth in India and China, many investors are starting to say, let's look at the rupee, let's look at the yuan. But apparently the Indians are even more insular than the Chinese when it comes to having their currency just floated internationally. They'd rather trade in dollars and euro and keep the euro circulating only within India. But as those economies power ahead, they have to start opening up their currencies.
You know what, if we look at the total pot, we look at the dollar being probably about 40% of the total pot, and you talk about the emerging markets, it is a 1% and even less than 1% in that pot. So it cannot be an alternative. Yes, it is nice to dip a little bit into the rand. It's being used for flight capital, in and out, in and out, and in and out, because of our interest rates, but definitely not as an alternative.